Welcome back. You're watching Market Fatafat right here on ET Now, show where we get to all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, now we have Osho Krishan joining us on the show. Very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And Osho, let's talk about a divestment candidate or that has been on the divestment list for a while now, and that is Concor. And how does the chart for this particular stock look like to you? Because every time you have a news flow surrounding the divestment, you've seen nice perk up in the stock, but then after that only consolidating going ahead. So now, do the charts reflect something else for it?
See, as of now, there has been consolidation in Concor for past 3 weeks. It is hovering near the 200 SMA on the daily chart. So approximately the zone of 660 to 690 has been a very lethargic zone where this counter has seen some kind of strong consolidation. But looking at the broader perspective, then we have witnessed some kind of cup and handle pattern that is also at the bottom on the daily chart. So from here onwards, that indicates that from here onwards, one can expect a decent rally in this counter. Any decisive move towards above 700 mark can give a very strong boost in this counter towards the immediate target of 740. And from medium term perspective, even it has the potential to retest the levels of 780. So overall, we are looking at a very attractive pricing for this counter, and a decisive move above 700 will be giving a very strong momentum in this counter.
Okay, that's the view coming in on Concor. Keep an eye out on those levels. But let's move on and talk about an earnings candidate again. We have Petronet LNG that's in focus. It's doing pretty much nothing as of now, trading with cuts of almost 0.4% in trade after the company reported its numbers. As of now, when you look at it in terms of the numbers, revenues have seen a decline of around 18.3% on a year-on-year basis, while the profits of the company that have seen an increase of around 13% on a year-on-year basis, while the margins that have seen an expansion as well of around 10.1% versus 7.5% last year, so around a 260 basis point expansion in terms of the margin. So seems like a mixed number that is coming from the company. Nothing exciting happening in the stock as of now, just trading with cuts of almost 0.3%.
All right, trading with cuts of as much as 0.3%. But Osho, on the charts, do you think that the charts are reflecting something else altogether? The scope of Petronet building on the gains that is already posted over the last 6 months, especially over the last 1 month?
Overall, from past 3 days, we have witnessed a strong traction in this counter. So overall, the lethargic phase or the consolidation phase in this counter has been pared away. So from here onwards, one can expect a decent run. But as of now, based on the earning result, there can be some kind of volatility in this counter. But overall, the technical structure is very positive. And from here onwards, one can expect the immediate upside target of 240. And even after that also, we can expect a decent up move towards the level of 250 from short to medium term perspective.
All right, that's Petronet LNG for you, but let's put the spotlight on DLF, and this realty major is in focus in today's trading session because it saw a huge block deal actually take place earlier on in the trading session. About 0.9% equity actually exchanged hands via block deal, and post that big block deal, you also saw multiple smaller block deals take place in DLF. So on back of that particular development, you saw the stock actually slip in trade. Right now, as you can see on your screen, the stock is down in excess of about 3.5%. The buyers and the sellers of the block deal are not yet known, but nevertheless, the stock is sulking because of the huge block deal that took place, 0.9% equity at one point in time, and then smaller chunks of bulk deals.
Okay, that's DLF in focus today. But let's move on, talk about Anupam Rasayan. And Lisa, how are the numbers looking like for this one? The stock is down and out in trade as of now.
So Anupam Rasayan, they came out with their numbers this morning, and weak set of numbers was reported by the company. Well, talking about the revenue, that was down 19% sequentially. EBITDA was down 13.8%, but the margin, that was marginally higher than last quarter. It stood at around 26% versus 25% in Q4 FY23. The PAT was also down at around 28% on sequential basis. Well, we had the management on our show today, and they are confident of sustaining 26 to 28% margin going forward. And they also highlighted that they see a possibility of exceeding this guidance. So quite an upbeat commentary coming in from the management. They also said that the revenue, the standalone revenue, is likely to go to grow at 20% on year-on-year basis. And the inventory destocking which most of the chemical companies are witnessing, that also will start unwinding in the next few quarters. And they also added that the incremental demand that will shift to the second half of this year. But most of the analysts, they are quite bearish about this stock, because if I look at the analyst recommendation, most of them have a sell rating because of expensive valuations. The buys and holds are just at around 40% compared to the sells, which are at 60%. So that's on Anupam Rasayan. It's down 1.5% as we speak.
All right, that's Anupam Rasayan for you, and also Lisa taking us through the key management takeaways as well. But Shesha, let's come to you and let's talk about overall realty. We know the realty sector is among the top losers. We saw DLF sulking in trade on back of block deal, but overall realty, why is this one seeing some pressure in trade?
Yes, a fairly muted set of numbers, and that is what the stock is reacting to. Lack of launches in the quarter gone by and lack of offtake in the existing research is why the stock has been declining today. As far as numbers are concerned, revenues came in at 910 crores, which has been largely flat on a year-on-year basis. Margins, meanwhile, came in at 52.1%. versus 54% that the company reported same time last year. So margins on a year-on-year basis have declined by about 190 basis points on a year-on-year basis. After reporting highest ever ARR in the fourth quarter, hospitality segment too this time has reported muted performance. Leasing segment revenue remained flat on a year-on-year basis but declined by about 6% on a quarter-on-quarter basis. So yes, weak set of performance that the company reported in the quarter gone by. Lack of new launches and lower offtake at their existing projects is why the company has reported weak set of numbers. The stock, as we speak, has recovered from the lowest point of the day but declining by about 1.7% as we speak.
Moving on to stock number 24, then that's BEL or Bharat Electronics. And Osho, on the chart, so what is the indication that you're getting for BEL? Last 6 months has seen a sharp run up already. How much or upside do you actually pencil in now for BEL?
See, overall the defense counter is looking very lucrative even at current levels also. Specifically, BEL has seen a breakout from the past week. On Friday, it has given a breakout from the consolidation zone around the levels of 128, 129. And from past 3 days, it has been consolidating at the higher grounds. So that means it is construing a positive development on the technical charts. And even from here onwards, one can expect an immediate upside target of nearly 136 to 138 in the short-term run. And even looking at the historical data and historical price action, one can expect the gradual up move to continue towards the level of 145 to 150 from medium-term perspective.
Okay, surely keeping an eye out on those levels for BEL. But let's move on and talk about Sumitomo Chemical. Why is this one in focus? Earnings, no guessing there. What we saw coming in terms of numbers coming in, it seems like a weak set of numbers that came in from the company. We had seen a sharp fall and the stock fell as much as 2% intraday in trade. The revenues of the company, that saw a decline of around 26.6% on a year-on-year basis. Overall, the profits of the company were also down on a year-on-year basis by 55%, and operating performance also was quite weak for the company because the margin saw sharp contraction of around 780 basis points on a year-on-year basis. The EBITDA margins just came in at 11.1% versus 19% last year. So clearly weakness coming in there as well, and operating in terms of the EBITDA in absolute terms as well, that came in at 81 crores versus 187 crores last year, which is down 57%. So clear weakness coming in the numbers of the company for this chemical company, and yes, that's why we've seen the stock fall as much as 2%. As of now, seen a bit of a recovery coming in and trading with cuts of just 1% as of now.
All right, moving on, Osho, let's talk about LIC, and this particular counter has been pretty much subdued. Over the last 3 months is when the stock actually started picking up steam. 3 months returns of approximately 10% also coming in for LIC. I'm sure that kind of excited the investors. But where do you see LIC headed from here on? Do you think that it will be able to actually get back its mojo when related to stock price?
See, overall in this financial year, LIC has started recouping from the lows that we have witnessed around the levels of 520. So gradually it is gaining some pace on the higher grounds, and even from past 1 month we have observed that this counter has sustained the 200-day SMA on the daily chart. So that is again a very positive development on the technical perspective. So from here onwards, the last 2 days has been very good in terms of volume and price action. So from here onwards, one can expect the follow-up buying in the coming 1 to 2 days to follow up towards the level of 680. But that is again a very short-term target. For a medium-term duration, one can expect it to recoup towards the level of 740, which is the immediate swing high that can be acting as a very strong resistance from medium-term perspective. So 680 for the short-term traders and 720 to 740 should be the target for medium-term traders.
Alright, let's put the spotlight on MotoCorp, and that particular counter has actually reversed all of its gains and now is trading lower by about 3.5% as you see, and as you can see there is a sharp cut that's come in the counter. Sources told ET now that the Enforcement Directorate has conducted searches at Pawan Munja's residence, and on back of that you saw the stock actually take a nosedive. We are yet to get some more clarity on what kind of these searches and why the searches were conducted at Pawan Munja's residence, but based on this particular news flow, we saw the stock actually react to it, and that's the reason why you have Hero Motor that's in focus, 3.5% downtick coming in, try to recover from the day's lowest point however.
Okay, keeping an eye out on Hero Motor, but let's move on and talk about Torrent Power. And Osho, today the stock is not doing anything exciting, but in the last 1 week when you look at it, Torrent Power surely has picked up that pace of gain, 10-11% return in just last 1 week. Last month also seeing a bit of a green there. What are the charts indicating now for Torrent Power?
See, overall the power sector is looking very lucrative. If I'll be talking about the major heavyweight from the power sector, they have seen a very significant up move. Torrent Power recently has seen some kind of correction from the levels of 740 towards the level of 590, and looking at the retracement levels, it has recouped from the lows for the 50% Fibonacci retracement, which is again a very positive development on technical perspective. So that means from here onwards, one can expect that Torrent Power should give a strong up move towards the immediate level of 700, followed by 740, which is the swing high or the 52 weeks high. So overall, in the short to medium term run, one can expect a decent run from this counter because it has shown a consolidation range breakout in the last week, and from here onwards we are having a bullish approach in this counter.
All right, moving on then, Lisa, let's talk about Navin Fluorine. This particular counter is in focus on back of his earnings, but today I believe the company also held a con call, and post that, as you can see, a sharp uptick on Navin Fluorine's stock price. What were the key takeaways?
Well, absolutely. Yesterday, the numbers that came from Navin Fluorine, they were quite weak and the stock was reeling under pressure. The revenue was down 29% on sequential basis. Margin came at around 23% versus 29% seen in the previous quarter. But today, post 11 o'clock, the stock has seen a sharp move because the management in its commentary, they sounded quite upbeat and positive about the outlook going forward, because they said that this quarter the growth that was restrained because of plant shutdowns, their HFO plant, and now it is running at full capacity and it has normalized also. It is running and it is expected to normalize the run rate for Q2 and Q3. So the volumes which they lost, that will cover up in the next few quarters, and they are not seeing much of a downturn because of the destocking which all the chemical companies are witnessing. Even the threat from the China dumping, that is not impacting. They are new molecules, but on their old molecules they are seeing some pressure from the China competition. And the CDMO business, that is going on a strong footing, and that is because they have signed a Fermion contract with the agrochem Fermion, and that is around 40 million over the next 3 years. So this year they won't see much of earnings coming from there, but from FY25 they will see significant increase in their CDMO business. So quite a strong commentary coming in from Navin Fluorine, and that is why the stock is up and running at around 6% as we speak.
Absolutely strong commentary, keeping the stock abuzz in trade. But let's move on, talk about Eicher Motors on the charts then. And Osho, what are the technicals indicating now for Eicher Motors? What is it that you're keeping as a target price now?
See, Eicher Motor has seen a very steep fall in the recent period from the levels of 3660 odd levels towards the level of 3150 odd zone. But from past 2 weeks, it has been hovering in a very narrow zone at the 200-day SMA. So, looking at the recent construction that can be seen in the technical chart, that from here onwards one can expect a decent rally or a strong rebound in this counter towards towards the upside target of 3580 to 3590 levels, which is the bearish gap on the daily time frame. So one can expect a decent 4 to 5% of rally from the current market price in this counter in short term run. And even on the downside, the risk reward is very much favorable. On the downside, we are having a very strong support near the levels of 3280 and 3300 zone. So any dip towards 3300 can be seen as a buying opportunity in this counter for the immediate target of 3580.
All right, moving on, Ashesha, let's talk about Kaynes Technologies, and this particular counter is in focus in today's trading session on back of its earnings. No doubt the stock actually saw a dip, then a recovery, then a dip again. What were the numbers saying?
Yes, quite a volatile day for the stock. Now as we speak, it is down nearly 3%. Weak set of numbers. Revenues came in at about 297 crores for the quarter gone by, which is a downtick of about 19% on a sequential basis. Margins too have contracted for first quarter FY24. Margins came in at about 11.8% versus 15.1% the company reported in the previous quarter, indicating a sequential contraction of about 400 basis points. Profit after tax, meanwhile, too has contracted. It came in at 25 crores, which is a decline of nearly 40% on a sequential basis. So very weak set of numbers. The stock has had a volatile day today. Now, of course, it is sitting with a cut of nearly 3%.
All right, let's shift focus then, and let's mark the flashes on the bottom of the screen. And the most awaited the GST collection numbers are out for the month of July, and it has actually come in at 1.65 lakh crore rupees for the month of July, which is actually recording an 11% year-on-year growth for the GST collection on that for the month of July. If you look at the gross GST collection, it has crossed 1.6 lakh crore mark for the fifth time since the inception of GST. A healthy numbers coming in for the GST collection numbers. Even the revenues from the domestic transactions are 15% higher on a year-on-year basis. This is what the government has said in its release while releasing the GST collection numbers. And for the fifth time ever since its inception, that's GST inception, we've seen the number cross 1.6 lakh crore rupees. And for the month of July, it's coming at about 1.65 lakh crore rupees, which is a jump of about 11% on a year-on-year basis. What are the other finer details coming in for the GST collection is the fact that the central GST collection is coming at around 29,773 crore rupees, while the state GST collection is coming at around 37,623 crore rupees. Also, IGST, that's the integrated GST collections, is coming at around 85,930 crore rupees. Cumulatively, if you put all of that together along with the cess of 11,779 crore rupees, the July GST collection numbers have come in around 1.65 lakh crore rupees, 11% higher on a year-on-year basis. A healthy set of numbers coming in for GST. And remember, tomorrow you have the all-crucial GST Council meet as well, Vinny.
Absolutely. So all eyes on that, and numbers surely seeing a jump up coming in over there. So keeping an eye out on that one. But moving on and talking about more stocks, and on the technical front, Osho, you picked out KPIT Tech for us. How are the technical charts looking like for this one, and what is the target price that you're keeping an eye out on for KPIT Tech now?
KPIT in the current financial year has already given a very strong upside move of nearly 35%. And from here onwards also the stock is looking very lucrative because the recent swing high around the levels of 1150, post that the stock has underwent to some time-wise correction phase, and even after time-wise correction phase we are expecting that the uprun should continue, as this counter is one of the outperformer from the mid-cap IT space. So from here onwards, on the very short-term period, we are expecting a target of 1160, and even post that, post the breakout above the levels of 1160, one can expect the decent run or the uprun to continue towards the level of 1200 on the short-term period. So overall, the technical structure for this counter is very good, and as of now, it is in the time-wise correction. So any breakthrough above 1160 can again give a strong thrust in the uptrend for this counter.
Okay, surely keeping an eye out on those levels over there for KPIT Tech. But let's move on and talk about an earnings candidate. We have Spandana Sphoorty that is in focus after its numbers. When you look at it, the AUM growth, that's seen a jump up of around 60.5% on a year-on-year basis, while the disbursements that also seen a growth of 26%. The NIMs that have come in at 14.2% versus 9.9% year-on-year basis and 13.9% in the last quarter as well. NIIs too seeing a growth, a sharp jump up over there as well. NIIs have come in at 293 crores versus 147 crores last year. So 99% jump up in terms of the NII of the company as well. Profits also, the company actually swinged into a profit this time versus a loss last year, and 199 crores is what the profit of the company stood at. So yes, keeping an eye on that, management is expecting an AUM of around 10,000 crores by Q2 and 11,750 to 12,000 crores by Q4 as well. So today, that is why we're keeping an eye out on Spandana Sphoorty.
Right, that's Spandana Sphoorty for you. And remember, Vinny, a lot of news reports floating in on who's trying to acquire a stake in Spandana Sphoorty. You had today reports suggesting Yes Bank, where Yes Bank a short while ago actually gave a denial to that story as well, calling the story pretty much speculative. Also, you had reports of Kedar Capital also considering acquisition of stake in Spandana Sphoorty. But what does the management have to say on all of these speculations? Listen in.
This is not the first time it has come. There was a similar item about a couple of weeks back as well. While this is a shareholder matter, but as far as the management is concerned, we came out with a Vision 25 a year back. It lays the roadmap for the next 7 quarters now as we speak. We believe as management that there's a lot of value that the company can deliver over the next 7 quarters until FY25. We are absolutely steadfast in terms of, and focused on the delivery, and that is what, the results that you see. So it's too early in my guess from a management point of view, and I think, there's still a lot of journey to be traveled, 7 quarters to be precise, and then we'll evaluate. We came out with this document, it was a clear 3-year vision. There is nothing which has changed from the time it was approved, and it was a board approved, roadmap which was laid out. Clearly, and you've seen, I don't need.
Let's move on and talk about Grasim then on the technicals. And Osho, how is Grasim looking like on the charts now? What is the indication that you're getting from here? Last 6 months, we've managed to see a 15% return for Grasim. What is the upside now?
See, overall, the Grasim is situated at a very crucial resistance zone. 1850 to 1870 is a very strong resistance that we have historically seen on the technical charts. But this time we have seen a sloping trendline breakout in Grasim. So that means we are expecting a bullish undertone in this counter, and any breakthrough above the level of 1870 will give an immense thrust in this counter to reach towards the level of 1960 to even 2000 levels in the short-term period. So overall, the undertone for this counter is very much aggressive, but we have to wait for the confirmation on the breakout that will be coming above the levels of 1870. So overall, we have a bullish undertone and are expecting that any dip towards the level of 1800 should be auguring well for the bulls to accumulate this counter from short to medium term perspective.
Right, moving on, let's talk about GMDC then, and that particular counter is in focus. It just came out with the numbers short while ago. If you look at the revenue for GMDC, it is coming lower by about 33.7% on a year-on-year basis, coming at around 766 crore rupees. Profit as well has seen a sharp knock, 36% downtick coming in for profits for GMDC, coming in at around 219 crore rupees. Operating performance also pretty much disappointing. If you look at the EBITDA margins for GMDC, it's coming at around 32.2% versus 38.1% on a year-on-year basis. So yes, subdued performance coming in for GMDC, and that particular counter, as you can see on your stock on your screens, the stock has taken a nosedive, now trading lower by about 2.7% as we speak, Winnie.
Absolutely, but that is GMDC for y'all, keeping an eye out on that one. Let's move on, and Osho, you've picked out Siemens for us on the technicals and charts. What is it that you are picking up over here? 33% return is what we've already seen, and currently at this 3,896 level, would you still say it's a buy?
Yesterday, based on some news, this counter has seen a very strong upside movement, but the psychological mark of 4,000 has given a small hurdle to the bulls, and the stock has again went into some cool off or profit booking that can be seen in this counter. But the overall technical structure is still very bullish, and any dip towards 3800 and 3850 should be acting as a very strong support zone. So still this counter has the potential to move beyond the levels of 4,000, but 4,000 being the psychological mark can provide some kind of hurdle on the immediate basis. But on the medium term perspective, one should definitely try to accumulate this counter even for a higher target near to 4,200 on the very short term period, and even it has potential to cross those levels from medium term perspective also.
All right, so that is the take coming in on Siemens. Lisa, Mahindra, that particular counter is in focus, and why is that?
Yes, it's in focus. Reason being that it will be establishing an EV battery testing facility, and this will be at a project cost of around 210 crore. Now, along with this, they will also be setting up a crash testing facility, which will be at around 290 crore, and they will be employing around 1,000 people for this. And this will be in the state of Tamil Nadu. With the traction being seen in EV business, this augurs well for Mahindra, and that is why we can see the stock, it's up around 1% as we speak.
Okay, surely keeping an eye out on that one. But let's move on to an exclusive story that we have, where the Finance Ministry may soon take a call on the capital infusion in the PSU General Insurance companies. Now, ET now has learned from sources that the Finance Ministry is meeting with PSU General Insurers on Wednesday, and may take a call on the fund infusion as well. Let's go across to my colleague Anurag Shah, who's here with more details on that.
Yeah, so FinMin officials are meeting chiefs of 4 PSU General Insurance companies, New India, Oriental, National and United India Insurance, and meeting is happening on Wednesday, 2nd August. So in this meeting, the decision regarding the capital infusion in PSU General Insurance company might be taken, because 3 companies are in dire need of capital. United India, Oriental and National Insurance, they are asking government about the capital because their solvency ratio is much below the regulatory requirement of IRDA, and these 3 companies are seeking capital from government. United India is asking for around 6,500 crore, National Insurance around 6,500 crore, and Oriental Insurance is also asking for capital of 14,000 crore. Remember, recently only DFS Secretary has said that government wants PSU General Insurance companies also to deliver record profit like PSU banks, because we have seen that PSU banks are showing good performance in last few quarters. So government has decided that they are expecting that PSU General Insurance companies also to deliver profitable growth, and the focus is on the profitable growth, and government has also implemented the performance-based reforms in PSU General Insurance companies. So all these will be discussed in the meeting on 2nd August with the DFS and with the chiefs of PSU General Insurance companies.
All right, thank you so much for that, Anurag, for getting us that exclusive story. The fact that the Finance Ministry is also soon going to take a call on the capital infusion in PSU General Insurance companies. So on back of that, keep all of these listed also players of general insurance companies in focus. But on that note, we are totally out of time on this edition of Market Fatafat. Thank you so much, Osho, Kunal, as well as Lisa and Ashesha for joining us on the show. And it's a goodbye from Winnie, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.